All right, exercise 4-8 is very similar to exercise 4-7. This problem can be, it starts on the bottom of page 181, but most of the information is on the top of page 182. Again, they give us an adjusted trial balance. They want us to prepare the closing entries. They want us to post to the capital account and the income summary accounts, and then prepare a post-closing trial balance. All right, so again, I have 4 closing entries that I need to make. My first entry is to close out the revenue accounts. And again, what they mean by close out is make that account zero by looking at what the balance in those accounts currently are. So here I have commission. Here's my adjusted trial balance, and I put this information in straight out of the textbook. It's the adjusted trial balance as of July 31st, so they must have a fiscal year end on July 31st. So here's my asset accounts. Here starts my liability accounts. Here's my owner's equity accounts. Here's my revenue accounts. We have 2 revenue accounts and I have 3 expense accounts. Notice with this adjusted trial balance, everything is in order. We have it in the assets, liabilities, owner's equity, revenue, and expenses. All right, so the first thing is to close out my revenue accounts, and it's these 2. I'll highlight them. All right, so it's commission revenue and rent revenue. And these 2 accounts, again, revenue accounts normally have a credit balance. So in order to close them out or make those accounts zero so we can start new as of the beginning of the year, again, the fiscal year ends July 31st, so come August 1st, I want my revenue accounts to reflect zero so I can keep track of my income for that current period. So let's see, we have commission revenue and rent revenue. I'm going to debit those accounts because they normally have credit balances, and these 2 accounts do have credit balances. So I'll debit them for their respective amounts, just like in trial balance. And then what I want to credit is the income summary account. So I'll credit that for the total. Remember, my debits and my credits must equal. The 65,000 plus the 6,500 gives me 71,500, and I'll close that out to my income summary. I have my income summary T account down here, so why don't we just put that in there? So I have a credit of 71,500. Again, I need to make this a little larger for you. All right. I'll have to do that for the capital account too. All right, so we closed out our revenue accounts. Now let's close out our expense accounts. I have 3 here, and they have debit balances. So in order to close them out or to make them zero as of the end of the year, I need to credit them. So I'm going to credit the depreciation expense, utilities expense, and the salaries expense. And here's the total amounts. And again, these amounts are coming right off of the adjusted trial balance. If I total these 3 up, so my credits come out to 74,600. So I know I'm going to have to debit an account for that, and that account will be the income summary account. So that's our second journal entry in closing our books for the year. So I'm going to debit the income summary for 74,600. So if I go down to my T account and just plop that amount in there, 74,600. All right. Now this is great. Look at this, because here our expenses are greater. Oh, dang it. Our expenses are greater than our revenue of 71,500. So we're going to have a loss. So this fiscal year, we have a loss. So let me total that up. Let's see what our balance is in the income summary account, because remember, journal entry number 3 in closing my accounts will be to close out the income summary. So I'm going to take the net of my debits and my credits. My credits are my revenue. The debits are the expenses. So the balance in the income summary account comes out to 3,100, and that's a loss. If we were going to make our prepare our income statement, we'll see that. We'll see the revenue here of 71,500 less expenses. These three expenses total up to 74,600, and that will give us a net loss. So if my income summary account is showing a debit of 3,100, in order to close that out, that means I have to credit it for 3,100. So in this case, I'm going to credit my income summary for 3,100, and the account we close this out to is the account I want to close this out to is the capital account. And that'll be the 3,100. So why don't we post that to our capital account? Let's see, our beginning balance is 45,200. Or, that's the balance in our adjusted trial balance, and that would be reflected in the detail of that account. All right, 45,200, and then I'm going to post this closing entry of my my net loss, my revenues less my expenses, and I'm going to show that debit of 3,100. Okay, then the final entry in closing out our books, closing out our accounts, is by closing the drawing account. Now we don't, you know what, I'll use a different color. The drawing account does not get closed out to the income summary. When an owner draws money from a company, that's not income or expenses. Actually, that's a contra equity account, and it shows up in our owner's equity, but it's a drawing account, and we're going to just post that. We'll close that account out to the capital account. And so I have my drawing account has a debit of 16,000. So in order to close that out, that means I have to credit it by 16,000. And then the account that I'm going to debit will be the capital account. Same amount, 16,000. So I'll post that here to the capital account. I'm going to show the debit of 16,000. And the balance now in my capital account, let's see what I get. I'm going to total up all my debits and I'll net against that the credits of 45,200. Oh, I'm so sorry. I shouldn't have put that there, right? Because even though there was a net loss, if we look at our capital account, the total of the debits will not exceed the balance of that capital of 45,200, which is a good thing. All right, so let's see, I'll take my credits and I'll subtract out my debits from that. So we have a balance in our capital account of 26,100. And now I can prepare my post-closing trial balance. And my post-closing trial balance should only reflect the permanent accounts. And that would be my assets, my liabilities, and my capital account. Because my revenue and expenses are all zero now, and my drawing account is zero. So I have my cash, which these closing entries never affected these accounts. The only account that affected was the capital, so we have to be careful with that one. I'll highlight that in blue, so we'll make sure we watch that one. But all these other ones I can just transfer right over to my post-closing trial balance. I'm just taking those exact amounts and carrying them over. Right, here's accumulated depreciation as a credit, accounts payable, here's my cash as a debit. And now for my capital account, I do not want to take this 45,200, right? We closed out all these other accounts, the drawing, the revenue and expenses to this balance of 45,200. So I want that new balance, and that's 26,100. And that's a credit. And so if I total this up, my debits will equal my credits, and I do sum it to make sure. So there's our post-closing trial balance, and it's in balance. Our debits equal our credits. That's it for exercise 4-8.